We're talking this morning with Sidney Potter, who's written a book with great title, The Flip, a true life story of how a successful new Tract home investor went from zero to hero, back to zero. Well, I love that in its own interesting way. Very, very great pleasure talking to you this morning.
Mr. Donovan, thank you for your time. I appreciate it.
That's all right. So you obviously have had some experience in, flipping homes, and this is the whole real estate investment market that I'm sure has seen better days, but someone with some expertise and some history, it sounds like bad and good, probably has a lot to say about it.
I do. And, the flip side of this is when I started the book in about 2005, I certainly didn't expect the crash and burn ending.
No,
things were so busy. I picked it up in about 2008. The world had changed, and I thought I was going to be able to ride into the sunset. I didn't. So the last 3 or 4 chapters were different, but it felt good to at least flush it out of the system and tell the story, and that's what's happening now today.
Yeah, obviously there certainly was a time when this concept was incredibly popular and incredibly successful, and I'm sure you were one of the people that were right in there.
It was, and there's no doubt that there's been a huge paradigm shift. It's not like shooting fish in a barrel any longer.
No.
You really got to sharpen your pencil and visit the markets, and it's going to be a slow trajectory out, but it is happening market by market. I mean, this is a huge country, but some of the data looks depressing out there. But if you look at it a little bit closer, you can see some positive signs, and things are in fact changing. So that's the exciting part of it, actually.
Yeah. So obviously the challenge now is to figure out how you can take advantage of this in a marketplace that's decidedly softer than it was even a couple of years ago.
It is, and listen, for experienced folks out there, they've had to shift their methodology. I mean, it's almost real estate world in terms of residential investments almost is divided into 2 worlds right now. Those are cash flow and those are flippers. Cash flow. It's amazing. You're going to have low mortgage payments, and even in a depressed market, to Phoenix, to Detroit, to some parts of New York, it will bleed money. In terms of flippers, that's a little bit different in terms of waiting for that trajectory of appreciation. So you've got to make your bets, and I don't even like to think of real estate investing as gambling. It should be investing, which is prudent decision making. Mm-hmm. You've got to make your decisions slightly more careful right now.
Right. It seems to me that there would be great opportunity in terms of getting stuff at a much lower price than you might have before, but the challenge is how can you turn that around and sell that property to be able to move on?
True, and once again, it depends what your expectations are. You've got some bottom feeders that are really looking for 20+% appreciation rates in a short period of time. That takes a little bit more scrupulous research. And listen, real estate, this type of real estate investing may not be for everyone. You have to have a certain stomach for it, and that is that if you end up with a property that you've placed under contract and it hasn't met expectations in terms of the exit strategy that you're talking about, Jim, you may have to walk away. And that's certainly easier said than done.
Right. What other kinds of strategies do you think make more sense now that in this changed landscape that we've got?
From the small investor perspective, I'm not a cash flow buyer, you'd be surprised. I don't like the info commercial stuff where they dummy down to folks and they say zero down. That's not a real world. It's going to take looking towards investments that require little down. And let's say anywhere from $1,000 to $5,000 down. Let's say where you've got a mortgage debt of only several $100s a month or $100 a month, a couple $100, but your property cash flows $1,200 a month. You get 5 of those underneath your belt. You've got $5,000 worth of net income. Those are more prudent things to do. On a $70,000, $60,000 new home, and let's talk at the pedestrian level. Let's not think about the Donald Trump level. Forget about that. But a $70,000 new home is approximately $300 worth of debt service a month. But you've got, let's say, a mortgage or a rental cash flow of $1,200 a month. That's about a $900 net. That's not mad, but it's a critical mass issue.
Mm-hmm.
Multiply that by 4, 5, 6 times, and you can acquire these homes with 10% down on a $70,000 home, that's $7,000. You've got folks that will constructively move money out of 401ks and say, you know what, Standard & Poor 500, S&P has been underperforming. I see all these deals out here. I think maybe I should get in the market. It's a wise decision, and I'm not a cash flow buyer. I'm more of a flipper, but if I can see good happening to folks that want to get back in the market, or even experienced folks, I would absolutely encourage it. I mean, 5 years from now, you won't be thanking me. You'll be thanking yourself for having made the decision and getting away from the paralysis by analysis and actually going up there and doing something about that and signing your name at the dotted line.
Yes, D. Sidney Potter, The Flip, a true life story of how a successful new tract home investor went from zero to hero, back to zero. I didn't think you're much of a zero. Sounds like you got
Talking to myself, yeah.
Nowhere to go but up, right?
Right.
Well, congratulations, and good luck with the book, and great pleasure talking to you. Thank you very much for your time.
Mr. Donovan, thank you. Take care. Mr. Donovan.